Welcome, everybody, to another week of Wealth Wisdom, where we're helping you build wealth and legacy.
Companies are like an organism trying to survive.
It's always a risk when you're investing in a company that's purely tied to someone's brand.
45% of Americans have gone into debt for a Disney trip. All right, everybody, welcome back to another episode of Wealth Wisdom by Fox Hill Wealth Management. Today, we're tackling something that affects every single one of us, but almost never gets discussed openly. Our financial fears and the mental barriers that keep us from building wealth. But first, we're going to dive into this week's rapid fire financial news, followed by our deep dive into one of our current holdings, which is going to be very exciting. So we've got, starting rapid fire, Eric got S&P 500 gained 0.41%, notching up to 5,935, continuing its recovery, which is fantastic.
Yeah, kind of a boring week though. Yeah, I feel like we've had.
I like boring.
Yeah,
boring's okay.
I like boring
not a ton of
sometimes.
news.
You know,
Yeah,
I'll take a little. I'll take a small bump with no big news. That's perfectly fine in my world.
Best May performance since 2003, which is fantastic. Overall, GDP contracted 0.2% from the year to date, which I think is a good thing. What do you guys think, Bill? Considering uncertainty, tariffs only down 0.2%.
Yeah, I mean, things like you said, they're looking good. Still, it's funny. We talk about the contraction of it. You know, let's see how. Again, everything is like, let's see how this plays out. Let's see how this plays out. So it will still.
Yeah,
I'm interested to see how these next 3 to 6 months go. Once we get a little more clarity on the situation. And kind of go from there. Mm-hmm. Everyone's on edge, right? That's for sure. So.
Yeah, and a lot of people are looking to the Fed right now to see what they'll do with rates. Eric, thoughts on? Do you think they're going to cut rates sooner than later, or do you think the market's going to be right?
I think they might hold steady longer than people think. It depends. Yeah, it depends how delayed the effects of some of those tariffs could be. We'll see. But if deals are made and the tariffs, I mean, it seems like a lot of the tariffs were overstated. So if that trend continues, maybe inflation won't go up. Fed can actually bring down interest rates. For now, I think they hold steady. So
for their June meeting.
Yeah. I mean, I don't know how much the stock market factors into whether they cut rates or not. But like, if the stock market just keeps creeping up slowly, I don't think they have a reason to, right? In that sense, and they're going to say, oh, even though there's a lot of other things that hinge on rates that probably, would be helped out by rates coming down. I do think in the back of their minds, they do look, the stock market's creeping up. We're not going to necessarily lower them as quickly.
Yeah, it'll be interesting. I mean, I think inflation is where they need it. The big headline this week was PCE, which is their preferred rate of inflation indicator. Is that only at 2.1%, which is I think fantastic. So some people are saying, hey, that gives them a little more wiggle room to cut rates maybe, but currently market is saying they're not going to cut maybe in September.
Yeah, they want to be, right? The 2% is the number that they're always saying that's where they want to be at, which is encouraging, seeing that I feel like forever it's just been runaway, right? Everything's going up, and as soon as we get control of it, then all of a sudden eggs are going up at a crazy, maybe not necessarily due to inflation, maybe due to some other stuff happening in the chicken coops, but yeah, no, it seemed like it was one thing after another literally for how long now? I mean, even as it was improving, it still seemed like it was going out of control. So, yeah, that's good. That's good. We're finally seeing some steadying in that area.
Yeah, I think Eric, the only thing that possibly could give them a reason to lower rates is jobs. The jobs report.
Yeah. Resilience there. Job market showed resilience with unemployment holding steady at 4.2%. So, yeah, job growth slowing, but we're still at like full employment rate. I know there's a lot of articles about how hiring slowed dramatically, but you need more jobs to be cut. to bring up that unemployment rate a little bit before they can justify cutting rates.
Yeah, I think there's a lot of talk with AI maybe as a cause for the lack of job growth, Bill. But I don't know what you think. I think there's certainly some jobs that are probably
I think that's
maybe
overstated.
within tech. I think it is, yeah.
I think maybe in some areas, but other areas there's like so many needs. So
yeah,
it's pretty robust at the moment. There's a lot of, I think, it's more certain sectors than others are being, you know what I mean, more affected. Mm-hmm. But yeah, overall still really strong, and we're going to keep plugging away. I think, you know what I mean? But everything seems to be from on that end seems to be going along modestly. Again, I'm going to keep harping on this clarity thing, but once we get a little more clarity and stuff, I think that's also going to improve.
Yeah, you're not alone there for sure.
Yeah, I know.
Everyone's saying that, and I think the last piece for rapid fire today is this just a strong U.S. dollar trajectory. That's the most one of the most interesting pieces on this boring week. I think just because of Eric, earlier this week you threw out to the chat a graph, a chart showing, and we can hopefully put this in the show right now for everyone watching, but showing how the interest rates are higher for the most part here.
Yeah. Well, I pulled top 15 countries by GDP. Yeah. U.S. is obviously number one. Our central bank interest rate is 5.5%. Like, you compare that to the rest of the EU, they set their rates at 4.25. So that's going to include Germany, France, Italy, and then UK also has theirs at 4.25. Yeah. And then you look at, Japan's had theirs at near zero for years. It's at 0.15. I know, didn't they go negative at one point?
Yeah.
But so I think I looked it up. The inflation rate of the EU, their last print was 1.9. What was the US? 2.1, right? So maybe they are trying to use that to justify us being a full 1.25 basis points above them from where our central bank has our rates set to. But I think if we're following the EU's trajectory, which we have been following them downward, like our central bank was at 9, theirs is at 8. They've adjusted their rate down. We've followed behind them. So that some people could use that as a barometer for how to project out where the U.S. inflation rate is going to end up, or the interest rate set by the central bank.
And I know that's something that actually just all the yields worldwide and specifically Japan, I know we talked about in our weekly newsletter this week, the Japan carry trade, kind of, what's going on there. There's a bull side, a bear side, bull side and a bear side, of course. But if you guys are not subscribed right now, stop right now, go to foxhillwealth.com and you can subscribe to the newsletter, get those insights right away. Let's get back to let's dive into the main topic, guys. To me, this is fascinating. If you've ever thought about this, there's, I think, for most of you listening, I've definitely been guilty of this. There's a roller coaster ride of, certainly true for fitness, and people call it like a thermostat theory. So basically, the thermostat theory goes, it's if you you're working hard, you're trying to get fit, all of a sudden in your brain, you subconsciously say, I'm too fit. This is not who I am. And you stop working out. And then
you're too jacked.
Yeah, you're just too fit. You look too great. And a lot of people equate this to fear of success. So
too many compliments.
Subconscious thing. Yeah. For people pleasers, that's interesting. For people pleasers, they don't love these. They get to a point where they're too fit, and they're now afraid of it making others around them who are not as fit feel uncomfortable, which is really fascinating. But anyway, basically the thermostat theory says you're not comfortable subconsciously where you've gotten the new heights you are, and so you start to sabotage yourself. So you stop eating well, you stop working out, and you get to a point, and things only change until your thermostat range gets to a point of discomfort. And you say, oh crap, I'm gaining some weight. This is not me. I got to turn things back on again. So you start eating well, you diet, you start working out again. And people just roller coaster throughout life. And the trick is actually staying consistent, right? And when you reach that new height, you have to change your thermostat of comfort to say, okay, this is where my new comfort zone. So it's kind of like when you reach the mountain, go find a bigger mountain to climb.
Yep, find the next peak.
Yeah. And a lot of people kind of don't do that. They're like, all right, cool. I'm comfortable. I'm fine.
Or enjoy the view from the top.
Exactly. Absolutely. That's spot on. And so it applies directly to financial. Everyone has not only a fitness thermostat or a body image health thermostat, but a financial thermostat as well. And there's a great book.
So what, like if they get a certain amount of, sorry, what were you saying? Go with the book.
Go Secrets of the Millionaire Mind. For everyone listening, Harvey Ecker, Harv Ecker wrote the book. Great book, but he covers this in depth. One of the first guys to talk about this, but it is very fascinating. What were we going to say, Bill? Sorry.
Oh, no, I was just going to, I know. Shoot. Sorry, lost my train of thought.
That's okay.
It seems to be happening a lot.
I found it. I thought it was interesting, and like as your job, right? Financial as a CFP, certified financial planner, working with clients. That's why that's one of the many reasons people work with you, because otherwise, if you're kind of, I think, going down the financial path alone and trying to navigate that, you might rest. You're like, all right, cool. I've got
you've got
level
that person
of wealth
to help keep that consistency, right?
Yeah, to keep pushing you. To say no, we got to keep going.
Because definitely, I mean, I'm sure this is with anyone, right? To points of your career, you start doing really well. I mean, say if someone, especially maybe if you're in like a sales role, right, or something along those lines, you kind of make the case, right? Almost everything's a sales role in a sense, but
yeah.
You may not be a commission based, but you're always kind of selling yourself and what you do, and you know what I mean, things like that. But if you are doing really well and you have, let's say you've done really well in just saving and you have a lot of money in the bank, you might not be, working as hard or looking for that next position or things along those lines, because you get that contentness. And I'm sure that happens to everyone. Well, you put in
it's like lifestyle creep.
And you stacked, you know what I mean? Stack some cash or some equity and things like that. And you just, sometimes you want to enjoy your triumphs a little bit, right? And kind of take a step back. But at the same time, I think the important thing is stay disciplined, right? So don't fall off completely. You know what I mean? You maybe cut back a little bit in terms of the intensity, but continue to build at the same time. And actually, that probably is one of the more important times, right? To keep that discipline.
Double down.
You don't fall off. Or not even necessarily double down. I mean, you have to enjoy life. You got to, maybe cool your temperature, as we're speaking about thermostats. You know what I mean? Something like that. But still be at a functional temp. Mm-hmm. So that's the thing. And I mean, when those times are good, maybe, you know what I mean? Or when you're ready to go and you're mentally ready to go. Yeah, those are the times maybe double down, right? Because you're all in. Those lull periods, you don't want to get too low, right? You want to stay disciplined, continue to push through. Almost like those days that you want to work out or you should work out, and you don't want to work out, and you're like, I'm moving like a slug. But then you do it, you feel a lot better, you have a much more productive day because you did it, right? But you didn't do it because you wanted to or were motivated. You were just like, all right, this is something I need to do to get moving, right? I need to get moving. I need to get moving.
I don't think there's ever a day I really want to work out. I just do it.
Yeah.
I don't know. I don't know if it's motivate. There's no motivation. It's just more discipline. Just get in there and do it. So
see, it's like one of the few things in life I love.
I
don't know if I'm like a masochist or what, but I like the pain. It like frees my mind up, frees my stress. You know what I mean? All those things. So all those feelings I get from it, that's what I love about it. So
yeah, for sure.
Even if I'm like slugging through a workout, I still kind of, I don't know that I'm content to be miserable, I guess, in some ways. But I like that.
You were just very aware of the positives that it brings into your life, and it sounds like so.
Yeah.
And then so like back to the financial thermostat, what you said is like people might stop working harder or work as hard as they once did because now they're feeling comfortable financially. But I would also imagine it's on the other side of that is that lifestyle creep. Like, oh, great, I can just spend a ton of money now. Oh yeah.
Oh, all I know is
Back.
when Christian doesn't want to do tummy time anymore, I say, hey,
He's-
step it up. You're too comfortable.
back.
Keep
Uh,
couple more head raises, kid.
yeah.
Welcome, Christian. So yeah, and I think there's like the common financial fears that a lot of people face, Bill, are there's definitely the fear of losing money, so the loss aversion, fear of not having enough for retirement, fear of making the wrong investment decision. Are there others that you've seen? I know imposter syndrome might be another one about like around wealth building, which is an interesting thing. But there's a lot of fears. I feel like you guys, what you both do, like financial advisors and being a CFP, it's like there's a lot of psychology to it as well, which is why we wanted to dive into this topic today.
A funny one we see all the time. It's not necessarily about wealth building. It's like a loss of control when clients do eventually retire. Like the same client who was comfortable with the swings of the market and investing, like not aggressively, but being in it, knowing that they'll do better in the long run if they're able to handle some of the market volatility. You see them when they retire, suddenly they're watching their account way more. They start to panic if it goes down a little bit. Whereas you've known this client for 20 years and this is the first time they're doing anything like it. And guess what? It's because they don't have the income coming in anymore from their high paying job. But it's not like a fear of growth or anything like that, but just something worth mentioning.
Yeah, I mean, they've gone their whole life like being accumulators, right? And then at that point, the accumulation is so out of their hands, right? I mean, they still might be accumulating some wealth through returns in their investment, but they're also seeing it being distributed now at this point. Switch is very drastic, and I think that's something that probably everyone struggles with early on in their retirement because it's just so different. It's such a different place, and they're no longer in the place. You know, I hear people say that to me all the time. Well, Bill, you're younger, like it's different for you, and I'm like, I'm not planning, you know, how I invest your money has nothing to do with my, you know what I mean, with my life. I'm doing it for your life. You know what I mean? I don't think, you know, I'm like, if you looked at my personal portfolio, I mean, I do invest a lot of my money exactly the way the firm does, but I also take some other risks that I just want to, I don't know, kind of my own little like appetite or looking into some other stocks or something like that. I may put a little of my money in. I'm not going to do that with my clients' funds, right? I'm going to keep it into our strategies and things like that. And again, that's what I do with the majority of my funds, the overwhelming majority. So it's just, you know, it's something that I just think people, they worry about. It's an understandable, you know what I mean, worry. And I think going back to that, you know, having a strong financial plan, knowing that we have an idea of what your expenses idea, what your lifestyle is, what your liabilities are, and then utilizing your assets to meet those costs, meet those needs, meet those liabilities, and then hopefully grow, right, over time so that inflation and all these things that are kind of eating away at your assets are, you know, we're handling those risks and putting you in a position to continue to live the life the way you want to.
Yeah. Yeah, and living the life you want to, I think, is just it. How much of that is do tell clients like run your own race? Because there's a lot of like the keeping up appearances, keeping up with the Joneses. Does that ever come into those conversations you have with clients?
Eric, were you say sorry? Sorry, I thought you were going to start. Yeah.
Well, I was muted. Yeah, all the time. We actually had a client in a few weeks ago. Like they make a lot of money, have saved a lot for retirement. They just happen to live in one of the most expensive towns in the country. And when your friends make more money than you, it becomes very difficult to keep up with that lifestyle. And it happens really so fast, right? Yeah. And you're like, it's very easy to convince yourself that you need the same things that your friends have. It's very hard to break that idea. Yeah. So it is a difficult conversation. But when you're able to lay everything out, you lay out all the expenses and you can highlight certain things that they don't even need to get rid of entirely, but maybe they take it down a notch. Maybe it's a little bit less on the luxury goods. Maybe bring down your golf club membership, stuff like that. Or don't get the.
I was gonna say, how do you bring that down?
Well, you can go to house
negotiable?
membership, right? House membership. The maybe not the Mercedes, maybe your Toyota, all that kind of stuff. But very difficult, and those expenses add up quickly.
I don't know about you guys, Bill. Maybe I'd love to hear what you think here, but I find that the whole keeping up with the Joneses thing, the people you're trying to keep up with oftentimes do not care at all. It's actually a battle you're fighting in your own head.
I know. I'm probably the worst person to talk about this because I literally don't care about what anyone else does. So it's kind of funny because I almost take that. I'm like, why would you care what this person does with their money, or you know what I mean, things like that. You want to have, you know what I mean, maybe don't go out to dinner, have a barbecue. You know what I mean, like do something a little cheap. You know what I mean, something like that, right? Like you don't need to go to like an expensive restaurant, and most of those people probably don't. They don't really care either. They just they enjoy your company. That's that's the main thing. So stop. And if they are people that are like that, I hate to say it, but like, why do you want to hang out with them anyway? If it's, what I mean? If it's some type of social battle, that's not, to me, is like, that's not a relaxing setting. So
for sure. And it doesn't
guess
work.
What? Somebody always makes more money than you. So, get over it. You know what I mean? Like it's, no matter where you go, someone's going to make more money than you. So
it's, but a lot of it's more,
or Mark Zuckerberg or something like that. Right.
Yeah. There's levels. Oh yeah.
It's more subtle than that though. No one's going to be like, oh, you should have this kind of thing, but it's more like conversations that come up. Like someone's going to be like, oh, you're still working? Like I'm retired. Or, oh, you have this much saved for a retirement. Our advisor said you have 2 million saved. Our advisor said you need 5 million.
That's true. I do hear that stuff all the time. My house isn't paid off. My friend's house is, right? You know what I mean? Or something like that. I'm like, that doesn't matter. Like, you know what I mean? There's so much. That's why, like, when people say, what's my number? That is such a loaded question, right? Like, your number is dictated by your lifestyle expenses. So if you do not, you know what I mean? If you don't know where your expenses are and your liabilities are, like that's what your number is, basically an asset that pays out over time to meet those expenses, those future expenses. So if you don't, your number is basically for everybody, it's different because no one has the same mortgage. No one has the same real estate tax bills. No one has the same homeowner insurance costs. No one has the same food bill. No one has the same, you know what I mean? Like everyone's got different lifestyle. So that's why it's so important to know like what your life, what your costs are. You may really want to go on this certain vacation, right? And to you, it's so important to go to, this one spot where this other person's like, oh, I can go, I'm really happy going to this, more local vacation spot. And that's really where I get my piece each year. You know what I mean? Or something like that. And it could be completely different. That person could be a $10,000 resort, you know what I mean, in the Caribbean. The other person, it could be $1,500 for the week. I don't even know where, right? You know what I mean? Sure. Down the Cape, New Hampshire, something, you know what I mean? Something like that, $2,500 for the week. Yeah, I mean, it's so different. So stop trying to compare something with someone. It's incomparable. You're talking about 400 variables that go into it. Yours are all different than theirs. So why are you trying to compare yourself to what they have going on?
So true.
Yeah. So really just want to get by that. Don't think, oh, because I've seen people say, oh, well, our friends have their house paid off, so we need to do it by retirement. And they make literally bad financial decisions, you know what I mean, in terms of taking money out of things and things like that to pay off their house. I'm saying that it doesn't even make sense. You're actually going to have more money in 15 years if you don't do this, but that's the thing that they have in their mind to do.
Yeah, it's really interesting. Yeah. The other plate, just talking about where these fears come from, we just mentioned a lot of social comparison, keeping up appearances. There's also the lack of financial education. So that's another reason why people come work with you guys. And but childhood money messages from parents, like as they grew up, you know, and past financial traumas also are two big pillars of this, which is interesting. And there's the cost bill of you know these financial fears. You know, just, I mean, what are people?
If you
Yeah,
grew
what
up
is
in
the real cost?
Yeah, totally. I mean, if you grew up your whole life and your parents said, "Hey, we can't afford that. We can't afford that. We can't afford that," and you say, "Oh, I want to make enough money where like I never have to tell my kids no." You know what I mean? For
Mm,
things like that, and you should say sometimes we can't afford that, right? You know what I mean? That's
yeah.
but you don't, right? So you continue to spend and you're sacrificing tomorrow's good for today's, you know what I mean, gain.
Mm,
Right. That could be
mm-hmm.
tough. Um,
What are
especially
some of
when
the
maybe
symptoms if people are experiencing these fears? Like, what are some of the symptoms that you see?
what in terms of like anxiety, you know what I mean? Well, I mean,
Well, just like I mean, if they maybe they have cash just sitting in a savings account, right? Because they're afraid to lose it.
You're gonna
Or
be you're gonna limit your upside greatly, right? But
yeah,
it basically prevents you from living a different lifestyle, like a greater lifestyle, or dreaming of doing something bigger.
hmm
So yeah, but
well, I
that
think
being
there's
said, controlling your
yeah,
expenses is a big part of financial planning, and if fear is going to help you do that, then that's almost a good thing too. I don't know. Um,
yeah, yeah. You know, the real I would say like researching the shows is a lot of for me, and I'm sure you guys have seen this. Is like there's the paralysis of analysis, right? So it's just like you do nothing because you're afraid to make a decision.
100%. You see that all the time.
Yeah, or you
You
do
just
nothing
feel, I
because
mean,
you're waiting for the stock market to.
what I always find funny too is when people say, "Oh, when I have more time to look at this," I go, "You're not actually doing any work." You know what I mean? Like all I require, you know what I mean? Once we've talked and put everything together, I'm like, it takes you 5 minutes. You know what I mean? Like
Yeah,
I'm
yeah,
like,
yeah,
I'm the
yeah.
one who's actually spending the time. So I find it funny when people say to me, they're like, "Oh, I have some stuff going on right now, and so I want to hold off on this." I was like, that this is why you're in the position you're in, whether you realize it or not. You know what I mean or not? It's because you haven't gone ahead and started to automate things and put things in place, and you know what I mean, things like that. Everything is pretty set in your life. It is going to continue probably to go on this path, but
Mm-hmm.
you continue to hold off, you know what I mean, or try to do stuff yourself in areas where that you don't know, or you claim you don't have time, but then you tell me you're going to research stuff more. Like you're not going to research it more, and if you do, you're probably looking at the wrong information.
Yeah.
So that's one thing. I mean, if you find someone you trust and you know what I mean, you want to work with, get into it, but let outsource it.
Yeah.
Put you know what I mean. Let them do it for you. You know what I mean. So that's the thing. That's what part of the service is getting by all those major or
It's,
minor obstacles. Really
mm-hmm.
minor, but like in your head you think they're major. That you know what I mean. That's the thing.
Yeah.
Getting over those hurdles, putting the plan in place, getting those you know what I mean savings in place, making sure you know what you should have in emergency savings. You know what I mean, and then also what on top of that should be being invested right away. Once those
Yeah.
things happen, it's much very freeing. Very
Oh,
freeing, and you
yeah.
know what I mean. And you it's a little bit much at first. You look back in 3 years, you say, "Oh, that was good." You know what I mean? 5 years, "Oh, this was great." 10 years, you go, "Thank God I did that." Right? Because now
Mm-hmm.
I'm in such a better place than if I had continued on the path that I was. Um, but a lot of times people they don't know what they don't know. Not knowing, right, automatically breeds fear, right? Anxiety. You know what I mean? Things like that. And I understand there's a lot of bad, you know what I mean? The news talks about all these bad players out there and things like that. But do your due diligence, find out, someone who is trustworthy, get a feel
Yeah.
for them, meet them in person. You know what I mean? Things like that. Get to know them. If you feel like they're doing the right things for you, then move ahead. And you want to trust somebody, build that relationship, and have someone who you can throw ideas off of and things you might be thinking about financially. but that way you get an answer much quicker as opposed to trying to Google it, chat GBT it, you know what I mean? These other things.
Yeah, and you also,
they only give you really 60-70% of the answer. So.
Yeah. Well, even beyond the knowledge and the information, it's just having the value of having a coach, someone to keep pushing you even when you reach that peak, to keep pushing harder, make sure you're okay, but say, okay, you can have this now, but it's have this bowl of ice cream every once in a while, but it's okay, just keep pushing, keep driving forward. I think it's priceless. I think, at this point, let's dive into.
Well, wait, Justin, I just want to add to that.
Okay.
Like, just when you, sorry, I know, I don't even know if this adds anything, but like when you think of all your successes in life, it, like the things that I'm sure, I mean, it's for me, but I'm sure that this goes for everybody. The things that we've succeeded the most with, we've done it with other people, right? Like I think of like school, you were with other people. I think of sports teams, like swimming I excelled at, and there were other people helping drive me. There was a coach pushing me.
Sport, right? You know what I mean?
Work, like our business. Like I feel like you, Bill, Adam, you guys all pushed me to do a better job. Like otherwise I would just float along for sure. Or, building your own life with like a family, your spouse, you guys push each other to improve your house, improve your station in life, save for retirement, all that stuff. All right.
That's a great, valuable point.
I was going to say that point cannot be driven home. You know what I mean? Like, because it's synergy, right? Two forces working together actually produce a greater success rate than one's working individually, right? It kind of pushes you to new heights. 100%. Can't. I mean, this is coming from a guy too who was like a solo practitioner for years. Doing all right, but kind of floundering. You know what I mean? Until basically got a great team. You know what I mean? Working with me. That's really where my career has kind of taken off more than anything.
Sharp and steel, right?
Yeah,
Is that
so
the saying?
You want to have a good team, right? Working with you. You're trying to do it yourself and trying to cut some costs. You know what I mean? Here and there, thinking that you're like doing it. Typically, you're not doing yourself any favors, right? You think you are, but a lot of times you're not.
Yeah. How much marketing stuff do you think we'd skip if Justin wasn't there to keep us on schedule? Probably a lot, right? We'd be like, we'll push that next week. Yeah.
No comments.
Yeah.
So I think this is gonna warrant. There'll be a blog post that dives deep into this topic for everybody. You can, again, check it out at foxhillwealth.com. Let's dive into the holding of the week. We've got Amazon, deep dive into Amazon. When did we buy it? Why did we buy it? What's happening? What's happening with Amazon? We got Bill. You want to dive in?
Originally we bought it, back in early March, right, of 2023.
Yeah.
Maybe a little later than probably we should have, like looking back, but it's tough to catch things at the bottom.
Almost impossible, right?
Yeah. But kind of went back to why we do it. We're looking at upwards earning estimate revisions by some of the top stock research analysts in the world, and they met that criteria at that time. We liked a lot of things about it, from its diversity of its businesses to it. One thing Justin, we talk about this all the time, right? Do you use it? You know what I mean? And Amazon we use, right?
That's right. Yeah.
Amazon is one of those companies that I feel like everybody uses in some capacity. It would be more rare, right, to find someone who doesn't use Amazon.
I've had our Prime account for 15 years or whatever.
Everything from everything.
Just everything. So most people know Amazon obviously for the retail piece, the e-com, the Prime memberships, maybe Prime Video. But I mean, what else did we find attractive? The other. I feel like it's a very well diversified.
It was.
Yeah.
Dive into the details on that.
It was
very interesting.
We loved their exposure also to AWS, right? They're like the backbone of the internet, that Microsoft and Google. And then the other factor was ad revenue. I think it's like 9% of their total revenue comes from advertisements. That they're getting for third parties, pushing people to Amazon, which then, so it's like a total synergy, right? Let me pull up all of their, just so people understand. Yeah, online stores, it's 38% of revenue. Third-party sellers, 24% of revenue. AWS, 17%. That's the fastest growing portion of Amazon. Advertising services at 9%. Subscription services, so that's your Prime membership, 7% of total revenue. But guess what? They get that every month. We know what's coming in. Raise prices. No one leaves. Great business
Guaranteed.
model. Yeah. Physical stores, only 3.3%, but I assume that's got to be Whole Foods, right? So you've got exposure to grocery.
So they have actually
retail.
Amazon stores too.
Yeah.
Yeah, exactly.
Yeah, that too. Do they does Amazon, I can't remember, does Amazon own any of Blue Origin, or is that totally separate?
Separate.
Totally separate, yeah.
Yeah, that's a separate entity. Yeah.
Oh, that's a shame. That would be awesome
But
too.
Bezos,
That's not a moneymaker though, right? That's more of like a pet project.
I think so. Yeah, I don't think they've.
Yeah, it doesn't.
I
make
actually
any
don't
money,
know
but
enough.
I'm
I
sure it
don't know.
doesn't stop people from investing in it just because people think it's a fun idea.
Yeah.
That was like, Space Virgin Galactic, which is probably gonna fail. Oh my god.
No, but it's interesting how they have. We're talking about like all their e-commerce things like that, right? That has a little bit lower margin, right? But then they have all these other extremely high margin businesses, like you said, like AWS,
Massive.
the cloud computing,
Yeah.
the services that they provide, the third party seller, relationships that they have. A lot of people, right, might try to sell goods and stuff on their own. Instead, they've kind of partnered with Amazon. Amazon takes a cut, you know what I mean, in terms of a very high cut, by the way. But just being on that platform allows those people to sell more volume, right? Those companies.
They're
to sell
cut
more
so high
volume.
to the point where they're constantly being investigated for monopoly issues. So it's a great business model there.
Yeah, but they provide a really good service for those third-party vendors, and then, obviously they got a lot of different technologies and things like that they work with, even things like Twitch, owned by Amazon, and is a platform for a lot of people who
For gamers, right?
live stream, gamers and other, you know what I mean? I'm not into it, but I think like other content people, right? You just content creators in general. Some of them might be gaming,
Twitch.
you know what I mean? But
Yeah.
it might be other stuff as well. Just a very, very diversified company that is immersed in our lives. You know what I mean?
So diversified, yeah. And then the AI investments they're doing, right? They're a big player for Anthropic is right as well.
You got a major investor there, as well as using AI.
Under investigation though for stealing data from Reddit users.
Yeah.
You see that story?
I mean, they tend to happen, tend to come up. But yeah, no, they're just, I mean, they're a wagon, right? And they're using AI to improve. I mean, obviously they're a logistical mastermind, right? And how they've grown and how they work their business.
That's
I
a
will say
well-run
one
business for
complaint.
sure.
They often say that, like, oh, it'll be delivered by this date, and I feel like it never is anymore. But it's always like a day or two later. I don't know if anyone else is noticing that.
You're talking about retail, the retail piece now.
Yeah, just a general complaint about them.
A lot of my stuff's like same day now. It's
Same day is
But I
creepy.
feel like even when I order some of that stuff, I don't get it the same. I don't know.
Oh really?
The next day when you
What if they-
order it
who
at
else-
9
who
o'clock
else
at night, it
offers
shows
that?
up.
Same day?
It's crazy.
It is. It's
That
crazy.
it changed city living drastically too, right? Like I used to have to, when I lived in Boston, I'd have to walk like a mile to get to the grocery store. There was no like Walmart anywhere, so like random items you couldn't get. Instantly order on Amazon, don't have to worry about anything. It's I don't know, it's amazing.
Super simple. So getting the numbers, their recent current valuations and current outlook. Looking at that, you got the PE number, PE ratio, is 33.4 right now. Forward looking is 32.41. So it seems to be decreasing. Is that a good thing? Good thing, bad thing? How do you interpret that?
It is a high PE, but at the same time, you're paying for future growth, right? So you're seeing that this company's growing at a pretty rapid rate. They're doing everything they can to improve earnings and things along those lines. There is, the future looks obviously incredibly bright for, you know what I mean, for Amazon as a company. And so we're comfortable with that, paying for that valuation, knowing all the things that they're doing in order to improve growth, right? It's not cheap by any means.
Yeah.
They have a lot of different business lines that are doing really well, and they're also doing a lot of things to grow in other areas that we don't even know about, right? At this, you know what I
Sure.
mean, right now. Not the
They-
most, I wouldn't call it a value stock by any means, but at the same time, the potential and things like that we're more than comfortable holding it at that valuation.
Got it. And then what about, I mean, I know their latest reporting for Q2 guidance, there's a little, I mean, I think everyone's done this, but there's a little caution. Just, I want to paint both sides of the picture for everyone listening, but there's a little cautious, look for because of tariffs and uncertainty. Is that right?
I mean, they're a retailer, so
Yeah.
who, they get obviously stuff from all over the place, and China is a huge manufacturer of goods and things along those lines, as well as other countries, right? Like that we gather stuff and they sell it. Of course, that's going to give, some trepidation, things like that, because they're importing a lot of goods, right? That's being sold. And if they buy it for one price, you know what I mean? Or have it listed for one price and they go to fulfill that order and all of a sudden it costs them a lot more money, that can cause a little trouble, right? Puts a lot of pressure on the margins, and they might not sell as much volume, right? Because people might not be willing to pay that. So that could certainly affect its retail business, no doubt. But again, like I said, hopefully as we get more clarity, things will be able to, things will kind of normalize, right? As we get that clarity, and then things will continue to look good for Amazon.
Yeah. Yeah, it's really interesting. I also found it very interesting to see how small the margins are for the retail component side compared to the AWS, the advertising units, and so it makes
They're on
complete
like
sense.
two complete sides of the spectrum, right? It's like
It's
low margin
incredible.
business, huge
Yeah.
margin business.
razor thin margins on that side, and it makes sense what you just discussed too. Is like why so many economists look at Amazon as a barometer for the economy to see how consumers are spending. So I think it's a very cool business, well run completely.
It's it's a marvel, right? Like how it's been run and everything that they've done, and again, all the things they've added, right? All the services and stuff like that they've added over time, and
Which that, by the way, that PE is low for what it historically has been. Like I feel like every time the last 2 years I've looked at it, it was more towards like 60 was the PE.
Oh wow.
So I'm wondering if that's already, the price is already adjusted for, because it's not back to its all-time high. So I'm wondering if people are already
all-time high
factoring in that
PE or all-time high stock
high
price.
price, which would pump up the PE, but it's not there. It's not back to that point. So people are still concerned about tariffs, the uncertainty there. They don't know how to project it out. When a company's not releasing accurate guidance, it's going to affect the price.
Yeah. Any last comments on like last minute things on Amazon that you guys want to add in? We're getting to the top of the hour here.
No, just an amazing growth story, and they're continuing to just pour money into data center build out, AI investment, and you see what you guys were talking about, the margins there on the AWS technology side versus the retail side. You see where they're pouring money in on that tech end of their business. It's just so profitable.
Yeah. And they're like, think about it too. I mean, I know you were saying that the P has often been higher. They're definitely like a lot more mature of a company. I think at this stage, you know what I mean? Like when that was going on, where it had those high multiples, just the growth in general, right, was probably a little different, right? Now they're still expanding into new markets and things like that, but they were really, really focused on market share, gaining market. You know what I mean? Market share at that time. The growth was incredibly high. It's still really high. I shouldn't be. I act like this is like some, I don't know, whatever you want to call compared to. I don't know. So some, you know what I mean? Something like slow turning industrial or something like that. But it's still there's still an amazing amount of growth, and they print cash so that they're able to have these investments, right? So they're able to go into these other markets get assimilated very quickly, get their investment up and running very quickly, and start making money on them, that other companies just don't have the ability to do, right? Because they don't have the type of revenues that, you know what I mean, that they do. So they're utilizing almost like how like Warren Buffett, right, used the insurance business to make him a ton of money, right? You know what I mean? And then you
with
utilize
Geico, yeah.
that to then invest it better than say real estate and maybe like bonds, right? Like he took it and was like, all right, now I can kind of invest and make a lot of money in the market, make a lot of money in acquisitions, things like that. I mean, Amazon, same thing. They make so much money on the retail end, and that can actually be used to kind of fund all their other businesses that if maybe they just had those businesses on their own, they wouldn't be able to grow as quick because they wouldn't have the capital to deploy. So it's it's interesting. Do you know what I mean? How they do it, and it's
That's
really
a great point.
It's an incredible company.
Yeah. That concludes today's show. Thank you for listening, guys. Thanks for always joining us, everyone at home. Remember, the best time to start investing was 20 years ago, and the second best time is today.
Oh,
What a line.
Yeah. Just leave you with that.
I'm inspired.
And let's I'm gonna
That's why this
drop
guy's in
down.
marketing.
But hey, just as a reminder, everyone, this content is for informational purposes only and is not investment advice. Fox Hill Wealth Management is a registered investment advisor. All investing involves risk. Past performance is not a guarantee of future results. And with that, please let us know in the comments below what your number one financial fear is. Okay? And reach out to us at any time at hello@foxhillwealth.com for a free consult. Or if you just want to talk finances. All right? That's it. Have a great day, guys.
Everybody, do good, be good. All right. Bye-bye.